introduce myself. I'm Amar Sinha. I retired from the Indian Foreign Service, and now I'm a distinguished fellow at Research and Information Systems, which is a Delhi-based think tank. And we are very happy that the chairman of our organization, Ambassador Mohan Kumar, is also here with us and who will address us very shortly. Uh, just to introduce to our chairman, today we have focused on digital payments and basically the entire ecosystem that is evolving around the world to see whether there are experiences in different countries which can be helpful and whether we can build on each other's uh, from each other's advances, innovations that we have brought about, the inclusion that we have been able to achieve in our countries. We have today with us a very, very distinguished panel. Besides Dr. Priyadarshi Das from RIS, who will be chairing this session, we have Professor Janaki Raman, who is the Director, Institute for Development and Research in Banking Technology. I think this is set up by the RBI itself, Dr. Janaki Raman. Then we have Mr. Ritesh Shukla, who is the CEO of our National Payments Corporation. He heads the International Payments Limited. Is that a subsidiary, I think, of NPCI? And obviously, from the name, you can make out that they are looking at becoming, perhaps going global. Then we also have Dr. Ganeshnarayan. He is from the Airtel Payments Bank as the Chief Operating Officer. And actually, he represents the amalgam of the two sectors, how digital banking has opened up new businesses for the telecom companies itself, who are now transforming into banks. Then we have Dr. Kennedy Kemboi from Kenya. He is a regulatory specialist from the from the GSMA, is the organization that heads all the telecom companies. Then Mr. Make Amu from Uganda, Bank of Uganda. He's the Director of National Payment Systems there. Ms. Olen Kolawole, she represents EcoBank of Nigeria. And Dr. Emmanuel Mungongo from Bank of Tanzania. You see, we have, obviously, you can see that we have brought in lots of people from India and Africa. Basically because we have lots of commonalities. And of course, some of our operators are also similar in terms of the telecom operators on the two continents. But being the two youngest sort of continents and a subcontinent, I think it is only correct that we focus on this new modality of payment or interchange between individuals and how peer-to-peer money movement and transactions is happening. And this trend is growing. So today we'll be discussing the entire spectrum, the regulatory system, what the mobile companies have done, what sort of innovation ecosystem has developed, plus what is the extent of the outreach, and we'll be talking about Indian experience. We'll be listening to them for Africa because in Africa also, I think digital payment systems has really boomed and taken off. So we thought we can exchange views and see is there something that we can do in terms of together to make this mainstream in the global discourse agenda, digital payments and importantly financial inclusion. So with these words, Ambassador Mohan Kumar, let me welcome you for your opening remarks, and then we will do the technical session.
Thank you very much. I want to thank, I first want to welcome all of you on behalf of the RIS, but in particular, I want to thank Ambassador Amar Sinha and his colleagues, Professor Priyadarshi Das and others, for having put together such a wonderful panel. It is fantastic. As he rightly said, you are the movers and shakers in the field, and I'm particularly happy to see all of you. I will be brief because this is a business-like session, and I don't think we should give long speeches, but I do want to make a couple of points since Ambassador Amar Sinha has kindly given me the floor. One, I want to draw attention to the late political scientist from Sweden, a person called Hans Rosling. I don't know how many of you have heard of him, but he made a forecast or a prediction which is well on its way to becoming true, which is, he calls it the universal pin code. And he says the present pin code of the world is 1114. And I will explain what he means by 1114. He says the population of Americas, not United States, but Americas, is 1 billion. Europe is 1 billion. Africa today is about 1 billion, although it's closer to India's population. And Asia is 4 billion, primarily because of China and India. He says in 2050, unfortunately, he is no more, but every prediction of his has come true. 2050, he says the pin code will be 1125. In other words, Americas will stay at 1 billion, Europe will stay at 1 billion, Africa doubles its population to 2 billion, and Asia goes from 4 to 5, primarily because of India, because China has already peaked. I want to say this because not just from a strategic point of view, but the future of digital payments obviously depends on the people who are there. And obviously, we will have to invest in people and make sure these people are connected. But you can easily see where the markets are. The markets are essentially in Africa first and then Asia, particularly India, because our populations are still young and are growing. So that's the first strategic overview, if you like, on what this business should look like. But I think this dialogue is vital for the following reasons, as far as I'm concerned. One, COVID has rendered digital payments a necessity. It is no longer a luxury. It was viewed as a luxury before, only those who can afford a smartphone, those who can have access, and so on. I don't think this is now a luxury anymore. It's a necessity. And if you look at what Google and Reliance are doing, and I'm sure others are going to do as well, we are looking at a smartphone which is going to be cheap, $50, $100. All that is basically for this category. It's not for the 300 million people in India who are already connected. We are talking about people who are not connected, who can potentially become a big market, and those are in Africa and Asia. Secondly, I also firmly believe digital payments help in economic growth and recovery, frankly, because otherwise it's a lost market. If you expect people to come physically and pay with currency and so on, you're missing out on growth in productivity and economic growth itself. Third, I do believe Africa, and I think this Ambassador Amar Sinha in his opening remarks hinted at it, the powerhouses are essentially in Africa and Asia. In fact, I would say Africa, especially Kenya and others, have done tremendous work in this area. In many ways, I think Asia with India, we are following. It is Africa which has really set really a precedent. And Africa converted a virtue, made a virtue out of a necessity. Because infrastructure was not great and there were other constraints, it made digital payments a necessity. And that is really a good approach as far as Africa is concerned. And I believe that this is important. The two powerhouses are having this dialogue today. I also believe for the first time, there is an opportunity in this area for Africa and Asia to be rule shapers rather than rule takers. You know, traditionally, Africa and India have always accepted the rules formulated by Google, formulated by the West, and formulated by China, formulated by East Asia. This is an area, in my view, there are so many similarities, as Ambassador Amarson has said, between Africa and Asia, particularly India, that we can actually set the rules in this area. To me, that is exciting. At least one area where we can be the trendsetters and we can frame the rules as we like. And this obviously will depend on innovation and creation of an ecosystem that facilitates digital payments. So I see two issues here. One, what is the role for governments, which can create an ecosystem which will enable this rather than impede. There used to be a wonderful IT minister in India called Pramod Mahajan. He died, unfortunately, but he always used to be asked the question, why is IT prospering in India? And his answer was hilarious. He said it's prospering because before government could understand what the hell was going on, private sector took off. So, the government has to step aside, but create an enabling environment, the regulatory framework. And my question to you, and you are the experts, can we have harmonization and sharing of best practices? Because that can help both of us. So I want to once again really appreciate the fact that Ambassador Amarsana and his colleagues from the Global Development Center have put together this wonderful panel. I want to thank each and every one of you for coming. But really, for me, as I said, and I don't want to repeat myself, the important thing is where is innovation and technology heading? That's one question which I think panelists should answer. Can we be rule shapers? And thirdly, what is it that you expect from the government? Do you really, I mean, jokes aside, do you just want the government to lay off? Or do you want the government at least to provide the infrastructure, and an enabling environment? I think a specific set of points that you expect from the government in both India and Africa would be extremely helpful, because Ambassador Amarsana chairs this session. I mean, not this session, but the Global Development Center. And we can, because we are a government funded think tank, I would appreciate it very much if you give us a list of demands for the government. We can at least pass it on to the government with some authority. That much we have with this think tank, which is funded by the government. I expect that from this panel, so that we can try and see how people who are marginalized, people who are deprived, can then be brought into the economic ecosystem. So I'm going to stop here, Ambassador Amarsana, and thank you very much for inviting me. I will stay on for some time and then leave with your permission, but I would like to wish the dialogue all the success that it deserves. Thank you.
No, thank you. Thank you very much. In fact, let me just to the audience also say what Global Development Center does. Basically, this is an idea of creating a platform where we can actually cross-pollinate ideas and successful ideas that have have been proven in one geography or the other. And this, of course, has totally developing country focus. So it focuses on South-South cooperation. That is, how do we learn from each other? And that is exactly what we are trying to do. We are trying to create a large database or a resource center for such good experiences from around the world, developing countries, which can be tapped in and which can be replicated in other geographies. So with these words, let me welcome once again the very distinguished panelists. Of course, I will be coming back to give them a vote of thanks. But Ambassador, one thing that while government should disappear in terms of rule making and how they should proceed, in digital payments, I think government retains a very important role, which is of the digital frauds, because it has also enabled a lot of bad practices, especially in the banking sector. So that role needs to be strengthened of the government, and it obviously it cannot be based on traditional policing methods. New technology will have to be employed. People will have to be better trained so that they can trace and track, and of course hold the scamsters responsible. So with these words, Sabyasachi, may I hand over the floor to you to conduct the session, and I'll be, of course, listening in.
Thank you, sir. First of all, very good afternoon to all our eminent panelists and distinguished participants for joining in, and hope they will be actively contributing to the discussion later on. Both Ambassador Sinha and Ambassador Kumar has set the context for the panel discussion so well. So I have very little to add, but what I expect that the eminent panelists will certainly enlighten us those issues extensively in the limited time that we have. But just to take 1 or 2 minutes to give a broad perspective on what is happening in digital payments space, the key trends that you observe globally as well as in India and certainly in Africa. Digitalization is gathering speed and momentum all different sectors of the economy across the world. And it has become a necessity and a policy priority for all the countries in the world to understand what are the current challenges and opportunities in the sector are also anticipate the future evolution of the sector and the emergent risk patterns, the regulatory system that we need, and all sorts of things. So, what are the key deliverables that you get from fintech? So, fintech is actually making the consumers choose a range of services at convenience, and the suppliers also find it very convenient to offer the services and customize the products based on the needs and aspirations of the population. In Asia and Africa, as chairman mentioned, the growing urban population and the middle class is actually ambitious enough to spend whatever incremental income they are having, provided the services are attractive to them. And fintech firms, which provide digital payments, digital lending, digital, say, financial consultancy services, they are the ones who are actually enabling this sector to grow. If I just mention a couple of illustrations that what has happened during COVID, 12 out of 13 verticals surveyed by the World Bank, World Economic Forum, and the University of Cambridge in a very recent report have actually witnessed growth in all different segments, like digital banking, lending, capital raising, all sorts of insurance, every segment of the digital financial services. And in terms of the regions, MENA region has, say, experienced 40% growth in the transaction value, in the fintech transactions I'm talking about. North America, 21%, Sub-Saharan Africa, 21%. And fintech firms, interestingly, in the emerging market and developing economies, have experienced growth in transaction value and the number of transactions within the range of 12 to 15%. And what has happened during COVID, the fintech firms also have tried to retain their existing customers by offering some sort of fee or waivers or commission waivers, and tried to relax the qualification, onboarding, all sorts of criteria, and making the payment easy and affordable, all sorts of things. So what is happening? Governments are also willing to leverage fintech platforms to offer various kinds of social welfare programs. Our own experience in India in say providing direct benefit transfers to ordinary people successfully through the Jan Dhan accounts itself is a testimony that how these digital payment platforms can be really leveraged to ensure financial inclusion, to ensure integrating the unbanked people in remote and rural areas with the formal banking system, enhancing the delivery platforms of the various financial services. So all these things. Then what about the regulations? The regulators like central banks and regulators in different verticals also need to see them that whether these sectors are growing in an orderly fashion, how much risks they are building up. Of course, they are growing, but that growth and that attraction would then induce another set of investments by the startups. Startups are already growing, but what type of regulatory architecture that we should be needing in the near future? So there are this whole range of activities are happening. Also, fintech firms which I believe that is empowering ordinary people by making them understand the various digital tools which they can take benefit from. So these are some of the things. Since we do not have time, I'll just highlight some of the key questions that, depending on the competence and the experience of our eminent panelists, they can address. Some of the questions are mentioned already by Chairman RIS. But to be very specific, what is the role of technology in creating this inclusive and an interoperable ecosystem for digital payments? What type of cross-country collaboration we can envisage between India, Africa, between Asia and Africa, and how does that help in enabling businesses to drive job creation, poverty alleviation, and what sort of replicable models that can be jointly shared between India and African countries? And what are the preparations at a grassroots level to make these models viable? What are the specific steps taken by the governments to, say, promote digital payment platforms? And what are the lessons from COVID-19? So these are the some of the questions that we can probably deliberate upon. We have 7 panelists and we have 1 hour time. So it is a very short panel discussion. So I would request all our panelists to kindly make gist of your contribution and wrap up in 7 minutes. If time permits, then I'll come back to you for one round of summing up. So with this, let me invite Professor D. Janaki Raman. He is a very distinguished uh, academic and practitioner. So he's currently with in director of Institute of Development and Research in Banking Technology. As you know, this is one of the RBI led institution. He joined this institution in January, but before that, he was professor with IIT Madras in the Department of Computer Science and Engineering. And before that, also he had been a visiting professor at Rochester Institute of Technology, US. He has 150 research papers to his credit. That includes several books on grid computing, building large-scale software systems, grid and cloud computing, and then is also part of several journals like IEEE CAC Journal of Computing, and he's also in the board of IIIT, that is Indian Institute of Information Technology, Konum and Trichy, both the places, and several other fellowships, and as board member of several other reputed institutions. So with his long experience, we are going to benefit from his wisdom. So the floor is yours, sir. Kindly take 7 to 8 minutes, please. Thank you.
Thank you, Dr. Priyadarshini, for such a nice introduction. And also let me thank Ambassador Sinha and Ambassador Kumar for extending this invitation to IDRBT to participate in this panel and share our views on this very important topic of digital payments. To start with, I will draw the attention of this distinguished panel to the report by RBI, which was recently published. This is about the journey in the second decade of the millennium, about the payments, digital payments. So last 10 years, from 2010 to 2020, RBI has been doing this, these reports every 10 years. And the recent report came in for the last decade recently. And there are several things that were drawn in this report, which are very nicely, says the revolution of digital payments that happened in India. IDRBT has a specific role, and that's also has been mentioned in this report, in terms of national financial switch to start with, and then transferring that to NPCI when that was conceived, and also IFTAs, and then there are several initiatives that are pioneered by IDRBT in the digital payment space. And today we see the UPI becoming one of the leading digital payment infrastructure that has been created in the last 10 years, and reaching almost now 3 billion transactions per month. And it is such a success now that even there are people referring this to the Fed in the US, saying that what we have done in India should become a model for rest of the other people to emulate. And rightly so. Now I think NPCI has its own international organization to actually take whatever has been done with UPI to other countries as well. Having said this, I will come to a different aspect of the digital payments for the next 10 years. This report, certainly RBI report, has a section on challenges that are being faced by the digital payment systems right now. One of the biggest thing is cash is still the king in most of the places, because all the regular transactions, if you look at it, with the Aam Aadmi, they're still with cash. And then we have a long way to go in terms of moving people from cash to the digital transactions. Though we have achieved a lot still remains to be done in terms of moving the Aam Aadmi into the digital transaction world. I will give the thinking that we are currently doing at IDRBT, and some of it should be very useful in terms of bringing it to this panel so that it goes to the government as well. The first thing I would like to bring in is we have done this PM Jan Dhan Yojana and then linked the Aadhaar to the bank accounts and almost created 40 crore bank accounts, which obviously will be helpful in moving these people into the financial inclusion space. But what really has happened is, though we have created this bank accounts, the usage of these bank accounts by these people is very, very limited. And this really puts a burden on the banking system as well as on the per transaction costs that we will be able to do as far as this digital infrastructure is concerned. What, in my opinion, is really needed is a different thinking to bring in a qualitative change or shift from the way we want to push these marginalized sections into the digital infrastructure. I certainly believe we should think of the subsidies that we are giving is a good place to actually solve this problem in a completely different way. For example, a large amount of money is being now pumped in by the government, rightly so, for the marginalized sections in terms of giving them subsidies. Now, if we can ensure the subsidy amount is only handled as part of the digital currency or CBDC, central bank digital currency, and we create an infrastructure through which we create wallets, not bank accounts, but digital wallets connected with our national blockchain infrastructure or any of the other infrastructures we're bringing up. And the wallet could be a very lightweight mechanism for holding the money of these people without burdening the regular infrastructure, financial infrastructure of the banks on holding the bank accounts. What this will create is a mechanism by which the digital payments linked to the digital wallets could be controlled. And in fact, the governments could have more control on this important, because at the end of the day, people want to see what kind of policies are working, and the government wants to have control on its policies as well, For example, if the money is not spent within 6 months, the lapse can be programmed into the digital currency. These kind of things are not possible with physical currency, which can be easily done using the digital currencies. Now, what we need to create is a next generation infrastructure that actually moves at least to start with, all subsidies are moved into the digital currency space, and everybody who is able to do a video KYC automatically gets a digital wallet, and that becomes the single point of handling as far as the government subsidies are concerned, and that could provide a mechanism by which the whole infrastructure can nicely track what is happening. And we can also have an exchange which makes sure that any transfer from the fiat currency or digital currency to the other modes of the currency is through a regulated exchange. And how this money is moving, at least in the case of subsidies. And this can bring in efficiencies, and a lot of other things can be brought in by such a mechanism. And I believe to start with, instead of actually pushing through the PM Jan Dhan accounts, which is obviously a good thing, but then instead of actually linking them to the bank accounts, we should think of a different mechanism for doing this. What at IDRBT we are thinking is using the 5G, which we have a 5G use case lab for rollout. We are trying to see if we can create a network slice, financial slice, and also have a blockchain implemented on part of this digital infrastructure, so that the digital wallets connected with the video KYC, which can be automatically done on this digital financial infrastructure, could be a new mechanism for powering the digital payments. I certainly believe the digital payments have to be delinked from other financial instruments, other financial requirements, so that it becomes simple, easy, fast, and then also secure. And I think that kind of an infrastructure, if we can bring in with all our experience of building what we have been able to do earlier, I feel that's the next 10 years. This is something that we can actually get into a leadership position as far as the space is concerned. These are my initial thoughts. I'll be happy to come back. I guess, I know the chairman has actually put the 7-minute limit, so I don't want to go further and listen to other panelists. And if time permits, I'll come back and then discuss some of my ideas again. Thank you.
Thank you so much, sir. You have taken exactly 8 minutes. So thank you for such a efficiently balancing your views for the short time. Now I would move to Mr. Ritesh Shukla, who is the CEO of NPCI International Payments Limited. I just elaborate NPCI for our international participants. National Payment Corporation of India has this global outreach wing that is called NIPL, National International Payment Limited. Mr. Shukla has 20 years of experience. He is a hardcore practitioner with an MBA degree in international business. He has been in the profession with Axis Bank, HDFC Bank, SBI Cards, and Visa, and all sorts of things. He has been responsible for formulating business strategy, leading business development. So all different wings of the payment domain. So Mr. Shukla, you know that RBI has come up with this payment and settlement vision every 3 years. So last was 2019 to 2021, and they had identified 4 goalposts, what they call 4C: competition, cost, convenience, and confidence. And in the latest annual report says to a reasonable extent they have made progress. So since you are a practitioner, you can enlighten more on that, and also the global outreach aspects of NIPL. Now that we have UPI in Bhutan, so how do you see the possibility of replicating the same thing in other countries? So, Mr. Shukla, the floor is yours.
Thank you, Prakash, for giving me opportunity, and thank you, Chairman and Ambassador Sinha. Really delighted to be here and to the esteemed panel. And can you hear me?
Yes.
Okay.
Audible.
Let me start by, since I'm representing NPCI International, and, when you think of NPCI International, the other thing that comes to mind is UPI. And what we have built here in UPI is truly world class. And I will, and we've been at the center of it, of what is happening in India, and the whole world, as you said, is looking at it. In our, minds and in our learning, technology has been a big enabler, and it has been an enabler for financial inclusion, cash displacement, as well as citizen welfare. And of course, we are in the journey, so we have covered some distance, and there are lots to be covered. Now, when you look at technology, there are 2 things that, or probably 3 things that come to your mind. One is your mobile penetration, the second is your internet penetration, and the third is the population. So, and I'll relate it to India as well as Africa. Now, in both the geographies, if you see, the mobile as well as internet penetration is increasing. So that means that people have more access, and there is a need, or there is a opportunity to create newer use cases, to go deeper into the engagement as well as to expand the engagement scope. So these are the 2. Then third, if you look at the population of Africa as well as India, we have very young population across the 2 geographies. So now what that would mean is that there are early adapters of technology in both the ecosystems. So these are young people who are willing to embrace anything new that comes, anything new that is able to deliver convenience. So I think we have these things in the right space for both the geographies. And this is a very exciting news, and it's very, exciting for us as a, innovator or creator of digital payments technology in India. And we are very much looking forward to it. So now that's one. I would like to also demonstrate by giving UPI example and demonstrate the usage of technology that we've had here in India. So let's look at 2020. In 2020, we delivered commerce worth $457 billion on UPI platform in India. Now, this, if you compare, is equivalent to 15% of India's GDP. And 40% of these transactions are P2M transactions, while 60% are P2P, but 40% of are P2M transactions. And the share of P2M transactions is growing by the month. So last month, if I remember, in the month of May or June, if I'm able to recall correctly, the share of P2M transactions had increased to 45%. So now what it means is we using UPI platform have been able to create such a traction in the ecosystem that more and more merchants are adapting to QR technology and are being able to transact even in the times of pandemic wherein lockdowns have been enforced to drive protection and to contain the COVID spread. So this is actually wonderful, and we have about 90 million merchants in the ecosystem as of December 2020 in QR, and these merchants were never traditionally included in the digital payment space, but using UPI they are now included, and they are accepting digital payments. They are able to sell remotely. They are able to offer their services, and all this has been achieved in a very short span of time. I mean, if you look at our compounded annual growth rate from 2017 to 2020, we've grown at a CAGR of 285%. I am not sure if other payment platforms or solutions across the world can boast of such a success. So we have done amazing inclusion using UPI here in India. And this is not a work of a one individual company or one individual player. This is an ecosystem level collaboration. And some of the aspects, salient aspects of UPI that I would like to recall, or like to mention here for the forum, and particularly for our analysts from Africa, and just trying to highlight some of the aspects that have been the difference. UPI is a totally API-driven interface. It is very easy to integrate for new players as well as for the traditional players. So that, helps players plug into UPI ecosystem and start innovating, start servicing, and start catering to consumer needs. It is interoperable. So if a user is using any particular app, for example, let's say a user of a Google Pay can still make transactions or make payments to a merchant acquired by PhonePe, which is something I feel is missing in Africa, because Africa has big schemes, but there is a lack of interoperability. You're bound by a particular operator and you can transact within that universe. But here in India, we have built an ecosystem that is truly interoperable. And Reserve Bank of India has also now issued an instruction saying that even the wallets, closed loop wallets, are also required to come on UPI platform in next times to come. So second is interoperability. The third is real-time access to money. Imagine a merchant based out of a small village in India, and he's selling it to somebody remotely, and immediately he gets access to the fund that he sold the products for. Now that is, promoting liquidity at a grassroots level, and that is enabling commerce. So it's real time. It runs on aliases. It runs on simple aliases like an email ID. So my UPI ID could be Ritesh Shukla at OKSBI, and people can send me money in the simple alias. So that's the simple part of it. You don't need complex, long IBAN or bank account numbers or various other alias. It operates on open banking ethos. You can download any app, third party or bank provided app from Google or App Store. Using UPI authentication, you can connect it to any bank account in the country and start transacting. So it is it's enabling open banking, while rest of the world is now thinking about it, planning it. We have already done it since 2016-17. So it's truly enabling open banking. It can be integrated with multiple servicing channels to ensure that customers.
Shukla, please wind up in 1 minute.
Sure, I'll do that. So it enables, it can be integrated with multiple servicing channels. It could be mobile, internet, even USSD-based transaction mode. Because believe it or not, but in some places, even in India and in Africa, data connectivity is not as good as we want it to be. So you have USSD mode to support this commerce. And finally, what we are very proud of is that we have built a very collaborative engagement model that actually allows participants drive innovation, build better user interface, build better user experience, and drive traction. So these are some of the aspects that truly differentiate UPI. They put UPI in a very different league, and our numbers are there for it to speak about. So that's all I wanted to say. Thank you very much, Mr. Dash.
Thank you, Mr. Shukla. I'm really sorry for interrupting. Now, I invite Mr. Ganesh Narayan. He is Chief Operating Officer of Airtel Payments Bank. So he, by training, is a BTech from IIT Kharagpur, followed by management from SPJ, Institute of Management and Research. Overall, he has 22 years of experience and 18 years itself in this FMCG, telecom and financial services industry. So we would like to hear more from you, Mr. Narayan, on the role of technology. As chairman stressed in the beginning, the role of technology, especially innovative technology to develop, say, affordable financial products and services. So you have the floor.
Thank you, Dr. Dash. Thank you, everyone, for inviting me and to be a part of this panel. It's a pleasure to speak to all of you. I will talk about my experiences, of what Airtel Payments Bank has done in driving digital and financial inclusion. We are a 4.5-year-old organization. We have 55 million customers with us. 30 million of them transact on our platforms every month. We process anywhere between $2 to $3 billion of GMV every month, and our key focus segments are twofold. One is customers on digital. In India, there are approximately 600 to 700 million smartphones, of which approximately 300 million of them would be doing a digital transaction online, and that's really one of our key segments, where our approach really is to get more and more customers to adopt digital as a way of working, in the self mode. I think a lot has been said about UPI. And whatever is said is possibly less because, I think Ritesh has done a good job of really explaining, the success of UPI over the last 5 years. It's possibly the single largest, innovation, the world has possibly seen in the financial services space over the last several years. So that is really a key, element for driving digital growth. I will speak more about, the second part of our customer base, which is to drive financial inclusion. India again has more than 200 million, customers, who are financially excluded or who are underserved from a financial services standpoint, and that really is the key target segment for Airtel Payments Bank. We have more than 2/3 of our customers in Tier 5 and Tier 6 markets, and all of these are served using technology in a fully digital and secure manner, through our BC agents. We've actually set up a distribution infrastructure of almost 500,000 BC agents, where there is, and we've really identified 120,000 villages in the country where the nearest ATM or bank branch is more than 10 kilometers away. Unfortunately, in India, there are only possibly 230,000 ATMs, of which only 70,000 of them are in rural. And India has more than 720,000 villages. So effectively, you have one ATM for 10 villages in the country. And given the vast population and the length and breadth of the country, traveling to the nearby ATM, withdrawing cash and coming back and spending it actually is the single biggest pain point for customers in rural. Again, we have rode on a fantastic innovation, which again NPCI has sort of brought in, which is called AEPS, which is Aadhaar Enabled Payment Services. Approximately $3 to $4 billion of flows go through the AEPS platform of NPCI every month. So it's approximately a $40 million annual market, where effectively, all the subsidies, which, Dr. Jayakumar sort of spoke about, which the government gives into, Jan Dhan accounts or into bank accounts of customers, who are actually in rural, they have a need to withdraw cash. And the only way they could do it is by traveling to an ATM which is 10 kilometers away or 15 kilometers away and coming back with cash, which is also fraught with a lot of risk. They could get mugged and, security is a big concern. So one of the things which Airtel Payments Bank has done is to use technology riding on the NPCI platform of AEPS, created BC agents where the retailers are very, very close to the customer's residence. The customer can actually go to the retail point, use Aadhaar or give his fingerprint and actually withdraw cash in a fully secure and safe manner. There is no, concept of an MPIN or an OTP, which tends to get either abused or misplaced. because your fingerprint is actually your identity, and that works very, very well with consumers, with low-income consumers and consumers in rural. So that actually has been a key platform on which Airtel Payments Bank has been built. As I said, we have more than 500,000 BC agents in the country who serve customers in rural India, help them open a bank account in a fully digital manner, help them deposit cash and withdraw cash in a fully digital manner, and all of it enabled through technology, and thereby adding an additional layer of safety. Because if there were things which were done on paper, the paper could be forged, the signature could be forged, and all of that meant that there is a likelihood of higher, frauds. But with technology, we have ensured that a customer in deep rural in India can withdraw cash or open a bank account using his or her or their fingerprint, and do a financial transaction in an exceptionally secure manner. So that's something which has actually made a significant difference to the lives of millions and millions of customers. And I do believe that as we go forward, given that there are 720,000 villages in the country, the opportunity is large in India. I think we've just about scratched the surface. Despite growing 10 to 12% month on month on some of these metrics, we still possibly have made only a difference to a small fraction of India. And I'm really excited and looking forward to hearing views from all the other co-panelists, to understand what they have done, to really help drive financial inclusion. So that's really what I want to sort of say. Thank you very much, everyone.
Thank you, Mr. Anand Narayan, for keeping to the time. And now I invite Mr. Kennedy Kepkamboy. He's with GSMA as a regulatory specialist. He has a very long career in this domain. As you know, M-Pesa, which has revolutionized the Kenyan payment space. So he was with M-Pesa, and if I know it correctly, Safaricom also was a partner to M-Pesa, and he has also had a stint with Safaricom. So I would request Mr. Kennedy to share his views about the innovation in the digital payment platform in Kenya and in Africa, and how do you see the prospect of collaboration?
Thank you very much for that introduction. I hope you can all hear me very well.
Yes, we can hear you.
Great, good. So I want to do a quick presentation, and I'm hoping you can view my screen. Please confirm before I proceed.
Yes, we can. Thank you very much.
You can maximize.
Let me
Make
maximize.
it full screen. Make it
Yes.
full screen.
Is that okay?
Yeah, it's much better. You can go ahead, actually.
Thank you. So thank you very much for that introduction, and thank you for having me with you to be part of the panelists. That was a good introduction. I have indeed worked with Safaricom M-Pesa before. I worked with Safaricom for about 9 years, and now I work with the GSMA. The GSMA is an association for mobile operators globally, and we are stationed in London, but I am currently based in Nairobi, which is the Africa regional office. So I will quickly try to take you through a presentation within 7 minutes, as the moderator has said. And if you have any questions, feel free to just send it my way. So let me begin by just sharing with you some of the numbers that we are seeing in the mobile money industry. Currently, we have 1.2 billion registered customers, and this is derived from what we call the State of the Industry report, which the GSMA produces every year. One of the things that we also witnessed, and this is based on the figures for 2020, is that we saw $2 billion being processed daily by the mobile money industry, a very significant figure indeed. And one of the things we witnessed last year was a 65 jump on international money transfer via mobile money. We believe this was driven by COVID, and I'll be getting deeper into the issue of COVID-19 and how it has impacted mobile money. Just trying to understand the numbers before I get into the policy side of the conversation. The biggest contributors to mobile money growth are Sub-Saharan Africa and East Asia for now. They brought in one of the highest net additions to the industry, as you can see. And what the numbers you're currently seeing are the net additions for 2020. South Asia brought in an additional 16 million registered accounts, which is still quite phenomenal. But in terms of the fastest growing region, we are seeing a lot of growth in Latin America, which has previously been left behind in mobile money issues. So very interesting dynamics, and I'll get into the lessons on that as well. So COVID was indeed quite big last year, and it will be fair for me to just talk about it a bit. A number of regulators leveraged mobile money to be able to, issue safeguards to customers due to COVID. There was cash was a threat because COVID is spread through touching and touching cash. And some of the policy initiatives that we saw in different countries are as what you're seeing on the screen. Fee waivers were issued by many regulators, but these have since been reinstated. The other measures that were issued by central banks were, increasing transaction and balance limits, flexible KYC and onboarding, all in an effort to try and push people to use mobile money to digitize payments. So out of this, some of them have been made permanent, such as increasing transaction and balance limits. And the reason why this was made permanent is because the SME sector is now able to use mobile money because of increased transaction and balance limits. This was previously a restriction that made SMEs and MSMEs players not to be able to use mobile money, and this is a very welcomed move. Flexible KYC and onboarding in some of the countries, such as Ghana, where they copied the Indian model, where you can be able to, do remote onboarding, are some of the things that we are also learning in sub-Saharan Africa. But let me now go to the issue of mobile money and how it was adopted in different regions in Africa. Mobile money started over 10 years ago. It should be around 12 or 13 years now. And on the screen, you can see some of the early adopters being Kenya, Uganda, and Tanzania. And some of the late adopters were Ghana, Rwanda, Zimbabwe. From the screen, you can see the growth in the number of customers over time. And if I could just point to a country such as Ghana, on the left side of the screen, you will note that Ghana saw a significant jump in 2015. And the reason why this happened is because the Bank of Ghana at the time issued e-money guidelines that are permitted telcos to be able to offer mobile money services. But this is just to demonstrate for you how regulation can impact growth. Of course, Kenya, Tanzania, and Uganda were the pioneers, and you can see how this went. On the right side of the screen, you can see two countries. I'd like you to look at Cote d'Ivoire, and one of the other countries is Gabon. These are countries which were in regions that had, progressive regulations for mobile money, hence the growth. The other countries that you can see, which did not witness so much growth, are Central African Republic and Niger, which took a bit of time to adopt regulations, and hence the slowed growth. Now, some of the things that we've witnessed, especially in Africa, that have really led to the growth of mobile money is the regulations. There are different models. There are MNO-led models, bank-led models, payment savings bank models, such as the one in India, and what we are seeing, an emerging controlled model. So depending on the different aspects that are regulated by the central bank, there are different approaches to approach mobile money. The best so far has been the MNO-led model, which we are seeing has a significant success in many countries. And I think there are many lessons to be learned from that, and I'll get deeper into that if there are any questions on that. But I'd like to talk about some of the key barriers that we are seeing. The cost of compliance is a big barrier to many markets that are yet to really grow in terms of mobile money, particularly on the issue of initial capital requirements. On the screen is some of the data we were able to collect for different countries on the initial capital requirements. And the comparison we are doing here, like on the left side of the screen, is the comparison of capital requirements to banks. So we are looking at the issue of proportionality here. Countries that have high initial capital requirements tend to create challenges for the providers who want to use mobile money services. On the right of the screen, you can also see a comparison of the initial capital requirements to the purchasing power parity. And you can be able to view some of the countries on the left, which we feel like perhaps this is an area where the mobile money providers can receive a bit of help to ensure that capital requirements are not a barrier. Last but not least, important lessons that we have learned in different countries. There is need, and this is particularly now on the policy side of things, it's very important to have an open and level playing field that allows all innovative players to come in. The regulation should allow new innovation. Regulations should be proportional and cost effective, as I've mentioned. And it is important to have a test and learn approach so that if there's a new innovation, it can be tested before it goes to the market. There's an issue of technology neutrality. What we understand as digital payments today might not be digital payments in 10 years. And regulation should not restrict that. And so as we come up with policy regulations, we should consider that innovation is very fast-paced and regulation should not play catch-up. Interoperability is also very key, and it is important for policymakers to have these conversations. So as I wind up my presentation, before time elapses, it's important for me to just highlight some of the tools we have, such as the regulatory index, which show to the extent to which regulations are proportional in different markets. We have noticed that markets that have proportional regulations and progressive regulations have higher mobile money adoptions. This is all available on our website at the GSMA. So I will end my presentation there. I hope I've kept the time, and I will welcome questions at the end of before the end of the session. Thank you very
Mr.
much.
Kennedy. You have kept the time within the time limit. So thank you so much for bringing interesting insights on the challenges faced by payment system operators in Kenya and in Africa. Now I turn to our panelist, Mr. Make Amu. He's a director of National Payment Systems Bank of Uganda. So we just heard the experience from Kenya. So Mr. Amu is actually a very experienced central banker with 25 years experience in various fields of regulation like fintech, financial inclusion, regulatory sandbox. These are the issues which we are talking very much live today. So I would request Mr. Amu to share his views from the experience of Bank of England in, Bank of Uganda in implementing enabling regulations for digital payments and what it matters for Africa and rest of the countries. The floor is yours, Mr. Mackey.
Thank you
Mr.
very
Mackey,
much.
can you? Yes, thank you.
Yes, I hope you can hear me.
Yes, we can hear you, but
Okay.
if you can become a little louder, that will be better.
Okay, thank you very much.
Keep your microphone close to your mouth so that we can
Okay.
hear you. But otherwise, we are able to hear you.
You're able to hear me? Okay.
Yes.
I hope you all hear me. So
Yes.
maybe I'll
Yes,
move
it's
the
much
videos,
better now.
then
Please go
I'll
ahead.
just talk. Okay, so in terms of sharing Bank of Uganda's experience and regulation of digital financial services, I would like to note that for 10 years now, until 2020, we did not have a clear regulatory framework for these digital financial services or mobile money. So Bank of Uganda approached it through an indirect regulation, especially for mobile money since 2009. And we gave no objections to the likes of MTN, Airtel, to partner with financial institutions to conduct mobile money business. And this required establishing an escrow account with the bank to the extent that any e-value created must be backed up by money in the escrow account. So basically, it's an MNO-led kind of model. To support this process, we had to issue mobile money guidelines, which we did in 2013, but this still did not have the full force of the law. But we see fintechs have grown in number, and we are seeing over 100 fintechs operating in the country. And we are now ready to, we commence the process of licensing those that meet a criteria set by the bank, basically being those which are prominent and those which are systemically important. We, first of all, before doing this, we had to amend the banking laws, the Financial Institutions Act, to allow banks to recruit agents so that we can improve on access And the central bank allowed virtual connectivity to the shared banking platform. To the extent that we have agents now spread around the country providing banking services, and mainly cash deposits. 85% are cash deposits coming through the agents. And then in September 2020, we now enacted the National Payment Systems Act. And the following year, in March 2021, this year, we gazetted the key regulations to support the implementation of the act. So, like I said, in March, we already began licensing. We have now brought into the purview of supervision of central bank. We have issued 4 direct licenses as payment service providers and payment systems operators. We have also given an objection to one institution to operate under regulatory sandbox. To support this, we have to put into the public domain the oversight framework, basically defining how the central bank will go about the criteria for licensing and providing oversight on fintechs. And then we also put the public domain what we call regulatory sandbox framework. So the regulatory sandbox framework provides information on how you can come and to the bank, approach the bank. We have a fintech's office. And so through this fintech's office, you can submit an application and we'll give you an objection to operate for 6 months and a controlled environment with the central bank continuing to provide the oversight. This has worked well so far with one institution, but there are other applications in pipeline. We hope that this will be an area that will promote innovations in the country. We have also had to enhance our collaborative arrangements with the fintechs through what we call the CEOs Forum for Fintechs. And in this forum, we have quarterly meetings with the governor or deputy governor. And we also engage all the licensed financial institutions directly. But generally, what we see that there's a lot of growth. Mobile money continues to lead. Mobile money continues to lead. And mobile money serves the mass market, both people at the bottom of the pyramid as well as those at the higher levels. Then we also now have derivative mobile money products, and especially mobile banking, which is serving more the middle class, so that you can move money from your bank account to your wallet or from the wallet to the bank. And also, I've talked about agent banking. This is one of the leading channels, digital channels, that we see a lot of success in the country. And then, of course, we also have these aggregators that sit between the MNOs and the banks, and they provide services, especially like utility payments. We see the country on the move, and we see that from the recent Finscope studies, 78% of Ugandans have access to financial services now, and 58% of these have formal access. If you look at subscriptions for mobile money, we're now seeing 30 million subscribers. And if you look at active subscribers, we're looking at over 20 million, like 21 million active subscribers. When we compare this to the adult population of Uganda, which is, we say, 16 years and above, we see that almost 90% have access through the mobile phone. But of course, there could be some double counting. But again, when we look at just on a monthly basis, we see that on a monthly basis, about 70% of the adult population tend to use mobile money services. But of course, we still have challenges like the previous speakers have indicated. One of them comes from the legal side, the regulatory side. We still have some gaps, but we are quick to recognize them. One of them is what the colleague from Kenya mentioned about capital requirements. Initially, we had come up with 3 tiers, meaning small, medium, and large electronic money issuers. We realized this was not going to be good for us, so we had to increase the band to 6. This is under being drafted by the Minister of Justice. We now introduce 6 tiers so that you have micro, then you have small, you have medium 1, medium 2, medium 3, then you have the large electronic money issuers. That way we're able to give opportunity to many firms to get onboarded. The other constraints relate to agent regulations.
Amur, kindly summarize. Sorry for interruption.
Of course, infrastructure I'm talking about infrastructure and connectivity, issues of interoperability, and also the need to do public awareness, especially on digital financial services. But we have taken a strategic approach as the central bank to look at each things which can be done internally as Bank of Uganda, but we're also looking at working with all the stakeholders so that we can together institute some regulatory reforms, look at the infrastructure, and look at the issues of fair competition and consumer protection through this collaborative arrangement. So this is where we are as a country, and as I told you, there are still many pipeline applications which we are considering. We also see interest in the public sector. We see interest in points of sale, wide use, and debit cards. So I think with the time that I'm given, I think I can end here. Thank you very much. Thank you for listening to me.
Thank you, Mr. Ramu, for bringing your experience in Uganda on various spheres of regulation. Now I invite Ms. Olanike Kolawole. She is head Agency Banking and Consumer Bank, UCO Bank Nigeria Limited. So by training, she is a pharmacist, but has a very long career in the finance and banking profession of almost 25 years. So Ms. Olanike, if you can share your perspectives on the subject, on possibility of collaboration, the lessons from COVID, or your own domain of specializations. Ms. Olanike, can you?
Good morning. It's morning, Nigeria. I hope you can hear me. Good morning.
Thank
can you hear me?
Yes, we are able to.
Hello?
Please.
Hello?
We can hear you.
Hello? You're able to hear me. Okay, thank you. I had problem with connection initially on my laptop, so I'm using my phone. I'll send a presentation so you can run through it to everyone. So I will start with the introduction. I mean, the way mobile is going all over China, India, and the whole of Africa. The impact is huge, with 90% of the world covered by the mobile signal. In Nigeria, we have about 196, although average Nigerian might use two network, and whichever way, that means we have over 100 million fully on mobile in Nigeria. And this means this will drive profitability as a small accounts being managed digitally, transacting digitally means some good income for the financial institutions. Leading brand in Africa today, like other speakers said, is M-Pesa. I have lived in the M-Pesa country for like 5 years in EcoBank, Kenya. We have about 10 countries already on M-Pesa with 40 million users. And M-Pesa does about over 600 million transactions in a month right now. In the whole of Africa, there are about 19 countries with more mobile money than bank accounts. I mean, we all know that it's easier to actually drive financial inclusion through mobile money than bank accounts. The rise of payments in Africa is being founded that digital finance will increase GDP by 6% or 3.7 trillion by 2025. The way in Africa, like I said, Safaricom and M-Pesa is leading with over 40 million customers, almost 30 million active users, doing 640 million transactions in the month. Africa has recorded notable innovators in the Nigerian startup becoming big in photo wave and Paystack. Actually grew by about over 300%, about $4.6 billion in dollars. Sorry, my system is hanging. Push. What happened? Okay. Now to the business we are doing now, which is agency banking. Agency banking is taking good growth in Nigeria, growing very, very fast. There's a body connecting all banks and all fintechs offering agency banking in Nigeria. We have over 776,000 agents in Nigeria as of today, and transaction counts for this year is over 665 million. So Nigeria too is doing over 120 million transactions a month on agency banking, and value too about $29 billion right now. If you see what has happened with two companies, companies, Paystack and Flyway, the valuation of the two companies within the short period of years
Miss Oladike, we are actually
Nigeria right now,
having a disruption.
showing how big
So if you
can be. So I
if
want to say in conclusion that digital payments is the game changer for developing economies,
yes,
and it will continue to be the biggest job creation avenue. Financial inclusion is still not massively untapped, despite most Nigeria to 7% financial inclusion by the end of. Sorry. Hello. 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 Hello.
yeah, if you could kindly summarize, so that will be your input for the on the subject. If you can kindly summarize in a couple of points.
Okay. Okay.
Unfortunately,
in summary, with the penetration of mobile in Africa and the growth in digital, especially with the new wave 2020. Can you hear me? Hello.
I think there is some disruption. If you don't mind, then kindly give 2-3 bullet points of your key points of your presentation.
Okay.
Just
Okay.
2-3 bullet points of your presentation, so that because there is some audio disruption.
I was saying that.
Yes, please.
Yeah, okay. Number one, with the growth in mobile penetration, and then the advent of COVID-19, the digital payment industry is growing so well in developing economies in Africa and in Nigeria in particular, and digital payment is the big for development. Thank you. Thank you.
Thank you so much. Although there was some disruption, but essentially what you are referring to to seize the opportunities in the digital payment space. So thank you so much. Now I turn to Dr. Emmanuel Mungongo. He is a senior principal officer, Bank of Tanzania. So without wasting much time, I'll go straight to him to share his views on digital payments. How do we see the prospects of collaboration between India, Africa, and between Asia and Africa? So Dr. Emmanuel.
Yes, thank you very much
Yes,
for.
kindly take 7 minutes to finish your presentation.
Yes, I think my role as a panelist, I wanted to seek clarification, particularly on the issue of fintech, which our colleague from Uganda has pointed out. As Uganda pointed out that they have about 100 fintechs operating in Uganda, and they're in the process of licensing them. For me, I thought it will be useful to get further clarification on how Uganda is has managed to create the ecosystem which is supporting fintechs, and if we can get clarification on the arrangements in place for their licensing, but also if there could be some highlights about it, the kind of products which those fintechs are doing, and whether they are attached to banks, they're attached to mobile network operators. So I think given the number of fintechs which were reported is significant, we'll appreciate if we can get some clarification. Thank you.
Thank you, Dr. Emmanuel. Maybe in the course of the discussion, we can address that. But I request all our participants to raise their questions in the chat mode. So with Dr. Emmanuel's intervention, we have completed the views by the panelists, the first round of views. So there is already a question on the floor. That is, suitably, any one of our panelists can pick that up. I'll just read it out. The question is on like deposit insurance. Can the wallets be covered under the risk management? So like deposit insurance for banks, can the payment wallets be insured and be part of the as a measure of risk management? So any one of our panelists maybe can pick this up if you have anything to add. In the meanwhile, we expect questions from other participants. Our central bankers from Africa, if they want to contribute to this debate.
I didn't get the question properly. Maybe if you can repeat the question.
Yes, I repeat it. Like deposit insurance, there is a deposit insurance for the banks. Can the payment wallets be covered under insurance and as a mix of risk management, measure of risk management? Precisely like, can we cover them also as part of insurance? Deposit insurance is essentially guaranteeing the depositors. So can some sort of that facility be available for the payment wallets?
If I can come in for Uganda.
Yes.
Do you hear? Please. Can you hear me?
Yes, we can hear you.
Yeah. So in the process of discussing the bill initially and consulting with the stakeholders, initially these wallets were meant to be pass-through transactions. So it would be really expensive to want to have premiums paid on them. So what we did is we called them like special accounts, special deposits which are not available in case of insolvency, or so we ring fence the money. So the money is ring fenced and it's not available for in case an institution became insolvent or went under. This
Yes.
money would simply be moved away to another bank, say. So we just ring fence the money. So it's ring fenced, and that's what is provided in the law. So there's no direct deposit protection at the moment.
So what you are referring to, that if there is any balance in the payment wallet and if the bank, the operator collapses, then the concerned users of that wallet may not be guaranteed.
That would not, you know.
Yes.
So if one bank went down, they would transfer that money as it is to another bank. So basically the trust account. Yes.
So Professor,
So it will not be available for distribution.
Professor Janakiram, do you have anything to add to this? Or Mr.
Yeah, I think, as we start seeing the digital wallets become, part of the ecosystem, I guess, people will be concerned about, the risk involved in maintaining money in the digital wallets, So I think the regulation will catch up on this, in my opinion, because one thing is these may not be the same kind of accounts as I was mentioning, like the bank accounts, These are wallets. So, there's going to be some kind of constraints and then, easy to operate kind of modes on these wallets. And what I'm referring to more is, obviously when people operate their wallets, interoperability of these wallets and ability to move things and all those convenience things will come more important. And suddenly you're not going to park a lot of money into these wallets. So from that angle, I think the risk insurance of these wallets may not become that important compared to the convenience, whereas in the case of, I think, banks, the bigger risk is basically if the bank, becomes bankrupt, your account also, associated accounts all will become a problem, From that point of view, I think the insurance has been given for the bank deposits. Whereas I think this may not be that important, in my opinion. I could be, I'm not an expert on this, so I'm just trying to, say what I believe it could be a model for the wallets. I'm more interested in seeing the digital wallets becoming a way of our CBDC, central bank digital currency. And then if we bring in that in, I think a lot of inclusion, financial inclusion, and then tracking of the subsidy money, where it is going, and then all the leakages and associated things can be plugged. From that angle, I'm more interested in seeing digital wallets becoming an easy way of putting the money in there, right? So
thank you. So
yeah,
thank you. We have one question, but I'll just put one question for all our panelists to sum it up in one sentence each. So what is happening that after hearing all of you, we understand that this segment is growing. It is very much part of the digital economy. It offers opportunities, but at the same time, the regulatory ecosystem has to catch up. And the current framework that we have also need to be compared globally, and we learn from each other. But if we aim to ensure a secure and inclusive digital payment system, which also helps the governments to leverage on for financial inclusion, delivering social welfare services, based on our experience from the COVID-19, what should be that approach, and where is the scope for collaboration among countries? Because if I read correctly from the literature, the fintech firms especially have gone out of the way to relax some regulations, to relax some fees, to attract and retain the customers. But once the crisis is over, can we really sustain that model? And if we don't do that, probably the attractiveness of this digital payment may go down, or may become unviable for the operators. So the cost part of that, the regulatory compliance. So one sentence each by all of you, that if at all we need to seize this opportunity in this sector, what should we do? And where is the scope for collaboration among countries. Thank you. So I begin with Professor Janakiram.
Yeah. So I think one sentence is really, I think you're putting us on the spot now. Yeah, I
It's a
understand that.
quiz.
Yeah. Yeah, I understand that, because, let me say the following, I suddenly feel that this time is ripe for thinking of a secure digital financial infrastructure for the country, which will suddenly, not only be inclusive, but also, in some sense, become trusted, So that's very, very much important in the financial world. So I believe that that is what is the need of the hour. And we suddenly, from the UPI experience and whatever we have, we should be able to build one such, next generation digital financial infrastructure for the country. And that could be with collaboration from all the countries, around the globe, right? Yeah.
Thank you. It was a very long sentence, but it conveyed everything. So, Mr. Shukla.
Dr. Das, I was not able to hear you clearly. So if I understood your
No,
question.
I'm saying that what should we do to say grab these opportunities that digital payment platforms offer for the ordinary people, and if we do so to ensure secure and inclusive digital payment platforms, what should we do, and where is the scope for collaboration among countries?
So I think if I have to say it all in a sentence, I think one is it's very important that we share what we have learned with other countries, and more so in South-South cooperation model, which we are very happy to do. So the other is, I think, building interoperability, because if we are building an ecosystem here, some other country is building ecosystem in some other place, and we are able to connect the two, then the usage, the cross-border remittances, there are so many things that we'll be able to solve for. From my side, it's sharing your experiences and learning and working towards attaining global interoperability. These are two things I would say. And of course, all this under the progressive regulatory guidance, because in India, we have RBI has a very progressive regulator. They have always, thought ahead of time, and they've always been there to guide us and, help us create something that is relevant and appropriate. These are two, three things that I want to. Thank you.
Now I turn to Mr. Narayan.
Yeah, so in my view, I think what's most important is focusing on customer experience and solving for customer problems. I think all of us should be obsessed towards delivering a great customer experience. And if we did that, then I think customers are likely to stick to digital platforms in a significant way. As far as collaboration is concerned, I would agree with what Ritesh mentioned. I think a collaboration between the regulator, banks or financial institutions like ourselves and fintechs as the three pillars. And I think if the three pillars sort of work together, I think we can definitely drive digital and financial inclusion in a very significant way.
Thank you, Mr. Kennedy.
Yes, thank you very much. I think I'll summarize it this way and say it's important for digital payments and mobile money to be sustainable. So all policies that are put in place should ensure that we have mobile money 10 years from now. So reduce the cost of compliance and also look at the margins also for the operators. Number two, collaboration is key between all players, as my other panelists have said. The cake is larger for everybody. So when it comes to competition, everybody has a share of the cake. There's what banks can do. There's what mobile operators can do. When they come together, I think they will enjoy a very symbiotic relationship.
Thank you so much, Mr. Marke. If you have any concluding thoughts.
Thank you very much. From my side, as a priority, because the issue of costs, transparency, and security and lack of interoperability are key. To this extent, Bank of Uganda is looking at delivering or having in place a national switch as a public good offering. A national switch as a public good initially, maybe through build, own, and then transfer eventually. We're also looking at issues of digital financial literacy and government to increase investment in broadband, and lastly, collaboration. Thank you.
Thank you so much, Ms. Olanika. Just last point if you have.
Yeah, just like my other speakers have said, to actually really drive mobile digital payments A lot of collaboration will really be important between the financial institutions, the fintechs, the telcos, and together we can actually achieve so much in terms of financial inclusion in developing countries, especially Africa. Thank you.
Thank you so much. Dr. Emmanuel, your final thoughts.
Oh, thank you. I think for me, we need to think how does digital financial services move beyond the payments service provide infrastructure. We need to see how we can leverage the technology to address specific barriers facing various economic segments. And the second is to explore how we use the data generated by digital financial services in terms of product design and in terms of addressing remaining barriers of financial access in our economies. And regarding collaboration in these two areas, in terms of product design, in terms of data usage, there's a room for collaboration among countries. Thank you.
Thank you so much. Thank you all our eminent panelists for sharing your very valuable views and perspectives on the subject. I will not summarize, but I'll just take a phrase from the RBI report and conclude before I approach Ambassador Sinha to give his concluding views. Collaborative competition to encourage and facilitate innovations. So if we think something like that, as all of you stressed upon, would be the future of the digital payment space. And I personally believe that since I also work in the similar areas, that citizens are getting empowered through this digital means of payments, financial services. So leveraging fintech, leveraging digital payments for achieving certain developmental objectives should be also taken into account while planning any type of regulatory system for this segment of the financial services sector. With this, I would like to end this session and request Ambassador Sinha to give his concluding thoughts and also vote of thanks. Thank you.
Before that, actually, I had a question. You see, the
Yes,
question
sir.
was from Mr. Ritesh Shukla, because we had also seen that people who don't have smartphones, we had also done innovation for them. The regular phones on 2G could be included. Could you just tell us about that?
Thank you, sir. And in fact, I did briefly touched upon it. So for people who don't have smartphone penetration, because when we, were building UPI, the smartphone penetration in India was, if I remember correctly, was around 27%. And now it has increased to about 41, 42%. So we clearly had that audience in mind, and also the data connectivity is not as good in rural areas. So we have built a USSD-based module. We call it star 99 hash. So people can, from their feature phone, use that star 99 hash and start using UPI for P2P as well as P2M transactions. And we have actually that, and I think that's very relevant for African market, like it is for India. So we do have that capability in our UPI platform. Thank you for the question, sir. I hope I answered it.
No, you did. No, because I must have missed it when you mentioned, because that I thought was really something that was making it really universally accessible. So, but we have come to the end of this very educative session, I must say. A great, one gets a better understanding of how much of ferment there is in India. In India, of course, one of the key developments since 2014 of this new government has been in this area, which is both visible and it is having an impact. And I don't think I'll be very wrong in saying that this is really a success story. So one thing that has come out from all the discussions that we had from Indian perspective, African perspective, is that while of course companies will innovate, you need a very progressive regulator who thinks ahead of time, who stays ahead of the curve, and is a problem solver rather than a barrier creator. And it also needs a strong political push. If that political push is there, I think things move faster. Of course, in our case, I don't know whether it is wrong to say or it's borne out by fact, but demonetization was one of those disruptive moments which perhaps forced India and Indian economy to move towards digitization. And now we are seeing actually the change, and it's picking up pace. Other thing is, of course, that all the systems that we developed, we have to take care that these are interoperable rather than we start fragmenting the market into small segments. So that element of collaboration, interoperability, ability to talk to each other, I think will remain very important. Third thing, of course, financial inclusion or digital money has to go hand in hand with digital inclusion. So I think that becomes even more important, that first we bring people or get them connected digitally first, then the different benefits of it will start flowing to them. But basically all of you gave a very encouraging picture, and what the chairman said, that this is an area where we should think of building on our experiences, on our collaborations, and try and set standards for the world. Every new technology, of course, different technologies come in different areas. We saw it when we were growing up on the videos format, for example. No, you couldn't take your TV from here to Europe, or the Betamax formats would work with VHS, etc. So those things, the industry has got together and now sorted out the standards. So there's a great need for here also that the bankers and the financial tech companies to get together to develop standards which are universally applicable. Well, with these, I think I come to a close, and I want to thank each one of you for your time and contribution. And of course, I want to thank the team at RIS and GDC for making this possible, for working hard to get. It's not easy to get such eminent speakers at one platform on one day. So thank you very much that you all could come. I know that we couldn't. Last minute, there were requests to change the timings because some other speakers wanted to come from for example, RBI, somebody very senior. But we didn't want to. We wanted to respect the commitment that we had given to you. But I'm sure we will be having an opportunity to interact with them at a later date. So with these words, let me bring this to a close, and thank you on behalf of RIS and GDC for being together with us. We will try and summarize this and circulate a draft report. And what RIS chairman said, that we would also like to draw out certain, not really advisory, suggestions for our own regulators and finance ministry and RBI, and see how it goes. So thank you all, and have a good evening and good day.
Thank you very much.
Thank you very much. Thank you.
Thank you.
Thank you.
Thank you.
Thank you. Thank you. Bye-bye.